When are prices and rates going to drop on houses? I'm going to cover that today in November 2022 Richmond Market Update. Hey, my name is Forssenius, a realtor here in Richmond, Virginia, and we're talking about the November 2022 market update and jumping straight in. So November, technically still the fall, but we're entering into winter. It's getting really cold. What's going to happen to the real estate market? Kind of in the case where we've been in this position last year as well, is we're still in low inventory and high demand. Regardless of where interest rates are at, the month supply of inventory is where we come back at. Normal market, 6 months. Anything less than that, it's a seller's market. Anything more than that is historically a buyer's market. We're trickling around, and we've been around 1 month supply of inventory, meaning we are still in a heavy seller's market regardless of some of the price decreases on Zillow, maybe some of the interest rates rising. So we're still in a very heavy seller's market, but what does that really look like? Now, being in the battlefield with a lot of buyers, we are seeing where we're not having to bid at crazy prices on houses, a lot of new construction, a lot of resale, or even kind of pre-negotiating in their listing that, hey, we're willing to give $5,000, $10,000 back to the buyer in some kind of areas around Richmond to help pay down that rate, because interest rates are trickling around 7%. They're kind of stabilizing depending on what kind of loan product you do and how much money you put down in your situation on what you can get pre-approved on. The rates may vary a little bit, but we're trickling around 6.57% for buyer interest rates right now. And this time last year is an increase of 3.8% just on the rates. That's the biggest year-over-year increase in 50 years. It's all about inflation. Inflation is at a 40-year high, meaning that it's making people question their strategy, their time they want to jump in the market, and the Fed might still increase rates to keep on slowing the economy. Date the rate, marry the house. If you fall in love with a house right now and you can afford it with the current rates and the prices it's at, jump into it. Refinance later when the prices drop, and don't miss out on that long-term appreciation. That will be in your favor for the long run. So what's the alternative? Maybe you're renting right now, waiting for rates to drop, waiting for prices to drop, waiting for the good feeling of you getting a good deal in the market. Well, let's look at this renting median asking price chart. Since 1988, you can see a steady increase going up. That's not coming down, I almost guarantee. And probably if you dig into your lease you signed, if you're renting right now, a lot of leases have in terms kind of hidden away that they can raise the rent by a certain percentage year over year, really with giving you a very short notice before your lease is up. Something to just keep in mind if you are renting, but let's look in the bigger picture of, is the market going to crash? So for those of you eagerly waiting for the market to crash, you might have to wait a little bit longer because for the foreseeable future, we're not seeing any kind of sharp decline, just given the inventory levels that we've had and demand that we're seeing from all these buyers. A lot of people are jumping in the market now. A lot of people are waiting after the new year, or just waiting for things to drop down. So when they do drop down, they're entering the market, and that still creates that supply and demand issue that we've had for the past couple of years. So let's look at the price forecast here by some professionals. So at the start of the year, these predictions were almost all positive. And as we get closer to the end of the year, those expectations are starting to lower or lose the appreciation they have gained for their predictions in 2023 to what's going to happen with the price appreciation levels. Now the crash, we'll jump in this card right here, is not really a crash, but the big banks are starting to call for home price depreciation predictions. Wells Fargo shows a dip in the prices in 2023, or at least become more neutral, but appreciation back in play in 2024. So they're predicting next year might lose a little value, but 2024 we're bumping it up and we're back in business, baby. So we've seen some price decreases on Zillow, Redfin, all your popular sites that you like to window shop at night at. But we're also seeing some over asking prices in some specific areas, kind of in the Richmond metro area. Prices are stabilizing in most cases, but you have to go into 2023 knowing where your market is, what you're actually looking for location-wise and house-wise, and how to kind of strategize either a sale or a buy to get the best experience in the deal on your side of things. So make sure you have an experienced agent on your side. Like myself, this is where we kind of shine in our negotiation skills and getting you under contract and getting a little bang for your buck if you're buying, or a little bit more money if you're selling. Not a lot of waiving inspections, appraisals, and no more naming your firstborn after the seller of the house just to get it. It's about the squeeze. It's about the negotiation, and we're here to help you out. If you're in the Richmond area, I want to talk about that buy or that sell. We do free consultations. We can help you out, talk about your timeline, talk about advice maybe we have. Maybe you are looking for a rental, owner-occupant, whatever the case may be. We got a free sign-up link below. Happy to talk anytime with you. This has been the November 22 market update. See you on the next one.